Welcome back to another episode of Broke Up, Not Broken. I'm your host, Jamie Lima, and founder of Allegiant Divorce Solutions and Secure Split. Today's guests are Broc Buckles and Peter Ciravolo, co-founders of BC Brokerage, a nationally licensed life and disability insurance brokerage that's shaking up the way we think about protection planning. Specializing in working with business owners, high-income earners, and individuals in major life transitions, Broc and Peter are on a mission to demystify insurance, whether it's preserving income, safeguarding your kid's future, or protecting your financial plan during or after divorce. They make sure insurance isn't just an afterthought. It's a tool for long-term security and clarity. This episode is going to give you practical answers, straight talk, and maybe even a new outlook on the impact that the proper amount of insurance can have on your future. So buckle up, grab a cup of coffee or your beverage of choice. Let's once again get you personally and financially empowered. Broc and Peter, so good to have you guys with us today.
Good to be here, man. Thanks for having us.
No, of course. And we've known each other for a while now, so this is going to be an amazing conversation. I've been waiting to have you guys on because our listeners are going through some stuff.
Yep.
And one of the biggest afterthoughts that I see in the divorce financial planning space, when helping people navigate divorce and think about their future moving forward, is the asset protection estate planning piece. So I'm super pumped that you guys are here with us to shed some light on that. So and leading up to our convo here, I know Peter, not so much, as far as experience goes in the divorce realm, but I know Broc, you've had some experience with it in your life.
Yeah, definitely, man. I mean, I was pretty young. I think it was in third grade when my parents got divorced, and so obviously I can appreciate kind of the how tough that can be and the things that come along with it. And from the financial perspective, you don't necessarily understand everything that's going on when you're that young. But as I got older, I started to kind of understand some different things about it and how it can affect people's lives. And so very familiar with the topic, and yeah, happy to talk about it, man.
Yeah, man. So let's just start with the basics, right? And we know, because we're in this world, we've been living it and breathing it for so many years now, but a lot of our listeners don't really understand how insurance ties in, especially around divorce. So maybe talk a little bit about that and what you've seen in your world.
Yeah. You want this one, Peter? You want me to take this one?
Yeah, I mean, I'm happy to take it. I mean, one of the largest things is just organization and looking at things from a claims perspective, right? If something were to happen, who is liable, who needs to pay for it, what proportions, might it need to be split. So, I mean, every day we're reviewing policies and definitely making changes to current ones, implementing new coverage, definitely a whole lot of different options there.
Yeah. And I would say, to piggyback off of that too, one of the biggest ones is, obviously, if you're married and then you're not married any longer, you might not want the person that you chose not to be married to anymore to receive a life insurance benefit or something like that, right? So making sure you have your beneficiaries in line is a huge thing.
What do you mean? If you pass away, you don't want your ex-wife to get the money? Whether her pool boy, her and the pool boy? That happens all the time, right? I mean, but we were joking about it, but it happens all the time. I think about, when you just said that, I think about a case that I was working on when I was back at the big name firm I came from years ago. And even before I left, I think we were like 3 years into probate because the wrong beneficiaries were listed on an account. There weren't beneficiaries listed on another policy. It was an absolute disaster. So just that tiny little administrative task of making sure that the right beneficiaries are in place can save your loved ones so many headaches later on.
Yeah. 100%. I mean, what could you think of that would be worse than, like, if something were to happen to you, other parts of the family or the kids being involved, of things just not being set up appropriately. So that's why, to what you do, Jamie, it's always important to stop, take a pause, and understand, like, all right, beyond the emotional side, there's a financial aspect to this. And also, obviously, tensions are high a lot of times, but you have to calm yourself down and be like, okay, but logically, what are the steps that we have to work through as we're going through this?
Absolutely. Can you talk a little bit about how disability insurance is factored into? Because that's a big one that we see people miss all the time.
Yeah, I think so, man. So in terms of how it's related to divorce, or just what it is, or?
Yeah, I mean, like, I'm thinking about one case that we have right now where this actually came up, and we're actually mediating a case right now. And the disability that this gentleman has in place right now is not going to cover him. There's not a lot of income coverage, right? So if he gets disabled and he's unable to work, I can't remember the exact percentage off the top of my head, but it wasn't a lot. It certainly wasn't going to cover the expenses of 2 households, his now alimony and child support. So having disability in place is also probably just as important as life insurance, because it's not always about you being 6 feet under.
Yeah, absolutely. Well, and actually, Jamie, that's a good point. There's actually a much larger chance of you becoming disabled than there is of you passing away, right? In the insurance world, we call that mortality versus morbidity. But, 1 in 4 of today's 20-year-olds, right, in their working career will be disabled at some point. We know that statistically. Doesn't mean forever. Doesn't mean you can't work at all. It just means at some point you can't work in the way that you are right now, okay? So that's the fact, number one. Number two, a lot of people don't actually understand the way that their disability benefits work, right? So I would imagine a lot of people that are listening to this podcast, maybe they're working somewhere, they have a 50 or 60% group disability through work, right? And you're thinking maybe to yourself, well, I could probably get by on that, right? 50 or 60%, if you're a diligent saver, maybe you can, right? But if your employer pays for it, now you need to know that that benefit is taxable coming to you. So you're not getting 60%. You might be getting closer to 40 to 45%. So that's the baseline, right? And if you're divorced and there's alimony and you're paying for things, you need to know that first and foremost. And then that's when you can start thinking about getting a private policy to kind of help with that. So line up the expenses, know if something were to happen, how much money you actually have coming in, and then kind of work backwards.
Yeah, I'm just thinking about this case right now. I mean, he's going to be in a world of hurt if something happens to him. And it's, most of us these days are not digging ditches, right? Let's just face it. Like, we're not, like, my dad is still digging ditches at the age of 72. God bless him. But for dudes like us, we're behind a keyboard. But that doesn't mean that there was one time when I actually got hurt working around the house, and I couldn't work for 3 months because I couldn't type with my right hand. So just having that disability insurance was a game changer. And like, I'm thinking through this guy right now, and it's probably a call I have to make after this conversation. Like, you really need to think about this, because if something goes awry, even though you're, an IT person, you could still have a problem here. I want to go back to the some of this too, or maybe you can talk a little bit about this. One of the things we try to do in many cases that we work on is to protect child support and alimony. And so what have you seen works well in that respect? Because this is attorneys miss this, and I'm not trying to harp on attorneys, but they miss this all the time. And then when I review marital settlement agreements and the documents that people are getting ready to sign off on, where they're going to impact them for the rest of their lives, effectively, insurance is something that they miss all the time to protect those income payments. So, like, what do you like from a tactical perspective? What would you recommend?
Yeah, I think at the end of the day, one thing I would say above all else is that you cannot rely on workplace benefits. Most people, they think they're covered through work. Those benefits can change. I would say when it comes to anything around divorce related, we are usually seeing private policies get implemented that are purchased specifically for that reason. Like, depending on children's age, family goals, expectations, things like that, we're building term ladders or policies built specifically around college funding or something around the house or the mortgage or something like that, right? Just how you alluded to earlier on the disability income, building policies that the amount is sufficient. Like Broc pointed out, there are a lot of caveats with workplace benefit policies. So even at that 60% benefit, right, it's 60% of what, right? Sometimes it's only of base salary. So for our sales professionals or those who are commission-based, it might not even cover any of that. Most of the time, too, workplace benefits, the disability policies, they're capped at either $5,000 or $10,000. For most families, right, I mean, $10,000 gets evaporated in an instant when it comes to a household monthly budget, right? So really right-sizing the coverage, and I can't say it enough because everyone wants to talk about insurance, and they look at it from just premium. And I completely get that. And we can always find ways to make policies cheaper, but I really want to frame it with anybody. Like, if a claim were to happen, we want to be made whole, right? Insurance is not there to make you rich, right? And it's also, if something were to happen, you want it to pay and you want to be made whole and be replaced. So just thinking about from a claims perspective, and whether this is on a car, it's on a life insurance policy, it's a disability policy, whatever it might be, just shifting it to, hey, if something were to happen, because bad things happen to good people, what do we want to have happen? How much would it be? And really just thinking about it holistically.
And you brought up so many different things, and it's not just the life insurance, disability insurance too. There's other insurances that are in play, like you mentioned, the auto and homeowners and all that. It's like all of those different policies need to be revisited.
Yep. Yeah.
Right? You guys work with, and I love the work that you guys do with financial advisors in this space, because, and it's like kudos to the two of you for doing this, because I am in a lot of the same forums you're in, and you guys know that there's a lot of bad advice in this space being tossed around.
Yeah.
And there's a lot of bad advice on TikTok about insurance. And Broc, like some of the stuff that you come up with on these videos is amazing. I love it.
Man.
It's so good. It's so good. So if you're listening and you're not following these guys on social media, you need to, because if you're going to not only going to get educated, but you're going to laugh your ass off. But talk to me about like we're all cut from the same cloth from a financial planning perspective. So from a financial planning perspective, where does insurance fit in, especially when it relating to like, if a client comes to you and they tell you like, I'm getting a divorce, what are you telling them first?
Yeah, that's a good question. So I would say, first of all, like, let's look at everything, right? Bring me what insurance policy. I think first of all, we have to list out all the insurance policies. So what do you know that you have? Did you take care of the finances, right? Like, let's start there, because maybe you're on the other end of it and your significant other, your spouse, was the one that kind of paid everything. And if you ask somebody, do you have an umbrella policy? They might not even know what an umbrella policy is, let alone if they have one, right? So I would say start with figuring out what you have, and then break it down and go to somebody like you, Jamie, who works with someone like us, and let's go through those policies. Who's on the policies, how the coverages are listed, who the beneficiaries are, and then say, okay, how are we splitting this up? Because a lot of times, like, this is your car, this is my car. Right now, those two cars are bundled under one insurance policy, but they're not going to be forever. And so I think kind of just taking it one at a time and going through those insurance policies, and don't rely on yourself too much to do it. I would say find a good person to work with, but go through them individually and see how they're set up, and go through all the types of coverage that you have and break them down and come up with an action plan of how you need to kind of strategically split away from what you're doing with your former significant other.
And this is not just a message to the client, right? This is also a message to financial advisors that are listening to you say this, right? Because
absolutely,
I see it time and time again. Financial advisors just don't know, for whatever reason, they don't understand how to handle this type of stuff. And I would, even before I started getting into this niche, so to speak, over the course of the last few years, I thought I had it all handled. Then I get into it, I'm like, wow, there's a lot more here than I thought. Yeah. So I appreciate the message. So if you're listening and you're a financial advisor and you're here on LinkedIn with us, because this maybe we'll pull this clip, you need to be listening to what Broc's saying, because it's incredibly important. Anything to add, Peter?
Yeah. I would add that a lot of these contracts are pretty adjustable. Okay. There's an owner, there's an insured, there's a payer, and there's a beneficiary. That's how it is on almost all insurance contracts, right? One big thing, we're talking about beneficiaries a lot. How about the payer? Making sure that bank account gets updated, right? I can't tell you how many people, they let policies lapse and then their health isn't the same and then they're uninsurable. Or then they're not meeting the obligations of a contract or their divorce agreement. And now they need to go get a new insurance policy and the premiums are even higher. Being able to change any of those four positions in an insurance contract and just monitoring them is important. Another one I would just add, kind of with any of the servicing stuff, what Broc said, just see what you have. Get your logins, right? That sounds insane, right? But most people, they have their Chase bank account login, they have their Netflix, right? They have whatever else, their Amazon Prime, but they have no clue where their auto insurance policy is, right? Just like a kind of a good, like, just housekeeping thing, like add your auto insurance to your Apple Wallet, right? Most states, they're going to start moving to a digital driver's license too. Really just staying organized. That's really the biggest mantra I can say with anything insurance related, because most households, they have probably about a dozen policies. They have a couple cars, umbrella, a home, vacation home, umbrella, life insurance policy 1, life insurance policy 2, spouse's policy, DI, something that Uncle Eddie sold them that they have no clue what it is, and everything in between. So just getting organized, getting your logins, and keeping it simple.
You had mentioned earlier about the different aspects, like being able to take over a policy or to make changes to the policies and so on. That brought up another question and either one of you can take this. Some of the advice that we give to, depending on the circumstance, is we would recommend that someone get in a policy on the payor, right? If child support and alimony is in play. How easy is that in real life? Because we recommend it a lot, and it sounds easy, and I've seen it happen before in a lot of cases, but it's a very small sample size. You guys are dealing with a much larger, the law of large numbers with you guys. So, like, how easy is that for somebody to say, I'm due alimony for the next 10 years. It's $1,000 a month. I want to cover those dollars on that particular person's life. Because again, to your point earlier, Peter, is people do let these things lapse. And I was responsible with my life insurance policy, and I had one in place when I was paying alimony, but not everybody's that responsible, and they don't make the payment, or they change the beneficiary after a couple of years because they think they're going to be able to get away with it. How easy is that for somebody to own a policy with somebody else to protect that income?
Yeah. As far as changing it, it's pretty easy as far as servicing. I would say one thing, it's a huge tidbit, not many advisors or clients know about it, would just be having a third-party notice on the policy. So that there's a person even outside of the contract, like a financial planner, like a lawyer, who's even outside of the servicing agent of the contract, right? You can add a third-party notice. I think that is a huge value add, and it's something that we see more like family offices kind of doing when it comes to service work around insurance policies. That's what I would say on that one. But it is pretty easy to change. The only thing is the owner is the only one who has the authority to change that kind of stuff.
But is it easy to start a new policy on somebody else? If you have that insurable interest, is it easy?
Is it easy? Yes. The person would need to know that they're getting insurance on them.
Yeah, you can't just
have an application. Underwriting.
To answer your question directly, Jamie, yeah, you can absolutely do it. Okay. You can have an owner of a policy, a payer of a policy, and the payer's like the person that you want it to really have it together. Like, they're going to get the notices. So yeah, you can absolutely do it and have them listed. It's kind of a different concept, and people don't really think it through. It's a recommendation that we make all the time, and I've seen it work. And I just thought maybe I was getting lucky with these cases because it seemed pretty easy, but I wasn't sure if there were other caveats to it that we weren't picking up on that we need to know about. As long as all the parties are agreeable in the situation, it shouldn't be an issue.
Yeah. And most of the time, though, right, the owner, the insured, and the payer are all the same person. Mm-hmm. And then there's a beneficiary. So, just getting it organized and really working with a good agent who's willing to do the servicing work, right? I will tell you that most of the time for this kind of stuff, you can go directly to the carrier or work with a good agent. But I will tell you that a lazy agent, they will not do it because it is a non-commissionable event. So I would just point that out, that as far as like getting the project over the finish line, sometimes just reaching out to your old agent, they don't care. It's not a new policy sale. So actually working with somebody who has your interests and wants to work with you is another key detail I would add there.
That is a huge, very important point to make because at the end of the day, really, it's all about the sales and the commission for a lot of people that are out there.
Yep.
What do you have to say about people having that mindset that estate planning and insurance planning is only for the rich?
Well, I think that maybe you've never been close enough to somebody having an insurance, filing a claim, because it's just not the case, right? Like, when you talk about disability income insurance, you might be able to say that or have that's not going to happen to me attitude, or it's only for the rich, unless you've seen how it can demolish somebody's financial plan and have them pull from all their investable assets and drain their 401k. if you have somebody that is in middle class America that has a life insurance policy, that can literally be the difference between setting their family on track for a positive future, sending kids to college. So to say insurance is just for the rich is, I would say a lot of ignorance there. Like if it's coming from an advisor, I need to talk to you. Like we need to have a conversation. If it's coming from people that just don't understand, I would say understand that there's different types of insurance that are for different levels of wealth. Sure, there's types of insurance if you're worth over $10 million that maybe those people would have that you don't necessarily need, but that doesn't mean that you don't need a $50, $60 a month life insurance term policy or a disability policy that's 1% of your income. It's probably still a good idea.
Any other thoughts, Peter?
Yeah, I would say it's a lot more affordable than you think. Most people, they wish they purchased more at a younger age. And that's coming from seeing, thousands of financial planners implement tens of thousands of different policies, clients coming to us a few years after we may have had a first conversation and they didn't think it was important at the time. And then a life event occurs and now all of a sudden it's very important. And the factors are not the same. Their health might not be the same. Their income might not be the same. They might have started a business and they might not have the income to qualify for some of these policies or anything to show. They're excited. They've got a business plan, but they don't have anything to show for it yet. So really just planning ahead, and just, there's so much that goes into it. So just working with a professional, that's all I can really mention.
What about those business owners? Because a lot of the people that we work with are now they're thinking through this, the next phase of their life. What is the new version of me going to look like? And we do have a lot of people that think about starting new businesses or taking on a different venture or whatever, leaving their old careers behind and starting fresh. Are there any particular things they need to be thinking about from a planning perspective, insurance perspective? Like, what about business owners?
Business owners specifically, the hardest one to qualify would be disability income insurance. And that is something that there's a workaround to it in some scenarios for some insurance carriers, and there's really only 5 or 6 that do individual long-term disability. But there's a few that they don't check financials for under a certain dollar amount. And for most carriers, it's either $6,000. There's one I know of that does up to $10,000 if you're a white coat, right? If you're a doctor. But like we were kind of talking about earlier, $6,000 isn't that much coverage, right? So if you're leaving, a nice W-2 job with full benefits and things like that, definitely something to think about. And with that, because you're paying for it, not your employer, those premiums are going to be different as well too. So just budgeting that in, thinking about it and being conscious of it. Because I would also say not having any is not a good mindset either. It is something to definitely budget for and to think about.
Yeah. Anything to add, Brock?
No, I think he covered it pretty well, to be honest with you.
Yeah. I have 2 last questions before I let you guys go back onto your busy days, but this one is a little bit of a wild card. But we talked a little bit earlier about the work you guys do in educating the public and advisors like ourselves, and you do so in a way that's entertaining, it's fresh, it's funny, but it gets the point across. Mm-hmm. But we also see all this other BS that's out there on TikTok. And I couldn't tell you how many times I've had people send me links to this, that, and the other, and using insurance as a retirement plan. And, or my universal life insurance policy as a bank account or whatever it is. Help me drive this message home. Because I think some people need to hear it from you guys because you're in this world. We should not be taking that advice, right?
Right. No, first of all, put your common sense antennas up. Right? If someone seems like they're pitching a product to be the end all be all and the answer to everything, get out of your chair and run. If you're on TikTok, keep scrolling. Because here's the thing. If people are not calling, and I think this is a very important thing to say, if people are calling a product something different from what it is. So you're calling a life insurance product a bank account that's supercharged or a Roth IRA on steroids that's not a Roth IRA. You have a problem. And if you're already in the conversation with them and you're having that, the thing that I would say is ask them how they're going to get paid, or comment or message them. Like, if you're that curious, ask them what the incentives are behind the scenes, because I can almost guarantee you it's not what it's going to be on the surface. And if they're not a financial planner, they're not talking about comprehensive financial planning, they're not talking about everything that goes into it, and they're just pitching a product and that's all they seem to ever talk about, they don't have your best interest in mind. They're thinking about how much money they're going to make from selling you something.
Yeah, I'll add to that. I'll say that there's one school where it is all the commission sales breath, the MLM. If you have any pressure within an insurance sale, it's not good. Okay. Mm-hmm. I will say that the one thing that's sneaky is there are some professionals who also have their CFP. They work for a big Fortune 500 company, and they're going to seem like they're doing holistic financial planning. They're going to have a planning software, but at the end, they're still going to show you a big whole life policy that you don't need. So really just having your guard up, being smart about it. If we were talking about Dave Ramsey's baby steps, permanent life insurance would be step number 7 or, 8 or 9, of the 7 baby steps. It's not something that the normal person needs to necessarily be purchasing. It has its place, but yeah, the predatory sales around it is definitely something to watch out for. And most people, they don't need it.
Do you ever notice that these people that are talking about this stuff are all 20 years old too?
Oh, yeah.
How much real world financial planning experience do you have when, you just graduated high school 2 years ago?
Yeah. Here, the guys that are doing that are the same guys that you can remember from high school that were jumping on every little opportunity to try to make a quick buck possible. Like, everybody knows that guy that's never had a steady career or job, that just jumped from thing to thing, thinking that this is going to be the next big thing. And so, you've got all these, I call them broccoli headed kids with the big haircut on the poof haircut and the tank top with the gold chains. And, a lot of these videos will get as ridiculous, Jamie, as them being a day in the life of an insurance broker. And the end of it is just them showing their car collection. I can tell you, it is not that interesting. All right. I love what I do, but if you think that you're some sort of celebrity from being in the insurance world, it's not the case. So yeah, the life experience isn't there. And what it comes down to is somebody is giving them a script and having them call people and selling them this stuff and post videos online. And it's not genuine at all.
Yeah. I couldn't have said it better myself, man. And next time I ask you the question like this, you should be less passionate about it.
Yeah, right. Sorry, did that come
as soon as I went with it, you almost jumped out of your chair, dude. I saw you going. It's important. I mean, that's an important message, because it's not. I say it all the time to our clients, and both on the wealth management side and the divorce planning side. It's people just. But if you're not, they don't teach you this stuff in school. You guys know this, and sometimes people just don't know, and they're like, "Oh, this sounds like a good opportunity," and it makes sense the way that they're explaining it, and then they get hosed in the end. Is usually what happens. Yeah. I promised I would let you guys go here real soon, but any questions I didn't ask that I should have, or anything you want to share with our audience that would be important for them to know that we didn't cover?
I don't think anything. The one thing I would share with your audience is, if you don't already know this and you're listening to this show, Jamie's an awesome guy. He does great work for clients. We've known him for many years. So he's probably not going to brag on himself. So I'll brag on him for a second. You can trust his advice. He's one of the good guys. So if you're listening to this, know that. And if you have questions, he's a great resource. You should absolutely reach out to him.
I appreciate that. That was very nice. I will pay you later. Yeah. Thanks, guys. I really appreciate your time today and for sharing this message. It's an incredibly important one. We should be talking about it more. This is one of those things that we don't talk about a lot, but we should definitely be talking more. But for those of you that are listening, if you need to connect with folks like Broc and Peter, don't hesitate to reach out. We're going to make sure we put all of their links in the show notes, social media stuff. Make sure you follow these guys, because they're incredible resources for you. For those of you that are feeling uncertain about your station of life and need some help on the divorce planning space, in the divorce planning side of things, don't hesitate to reach out to us at Allegiant Divorce Solutions. Absolutely happy to help. We offer free, complimentary, confidential conversations with all of you. So if you need help, don't hesitate to reach out. But thanks again, guys, for your time today. Appreciate it. Until next time.
Thanks, Jamie.
Thanks, Jamie.